Hey everybody, Kate Payne here from Standing Out Online. Welcome to the first Coffee with Kate of 2022. I have my friend and guest here today, Donna McPherson, CPA from New Jersey, and we're going to talk about taxes. Thanks
Yes.
for being here, Donna.
Thank you for having me, Kate.
Cheers.
Yes.
So I must admit, I'm actually not drinking coffee. I am drinking water. I only do my 1 cup a day. So
Same here. I'm drinking tea.
there you go. So coffee with Kate just sounds better than tea with Kate. Right?
It does, but it
Yeah.
works.
Yeah. So I'm so excited that you made the time to be with me here today on my Coffee with Kate show. I'm in my fourth year of my Coffee with Kate show.
Oh, wow. That's fantastic.
And oh my gosh, Laura Gisborne is here. Laura is an eWomen Network member.
I know
Yeah.
Laura. Hi,
Well,
Laura.
thank you for being here, Laura. And I'm excited to be talking to you today. So, Donna, let's get right into this. When you describe yourself and what you do, we know you're a CPA. We're not going to get into all of that. But one of the things in how you describe yourself is you're a profit strategist. What
Yes.
does that mean?
Well, Kate, listen, profit, if you have a business, profit is the key to your success in business. You know, they say cash is king. I say profit is queen.
Profit is queen. I
Profit
love
is
that.
queen because without her, there will be no king, there will be no cash. Because all profit is accumulated cash.
Mhm.
You've spent less money than you brought in, so you have profit left over. And that ends up in your bank account as cash.
And that's a good thing, right?
Yes, that's an amazing thing.
So when you let people know that you're a profit strategist and you're working with your clients, how are you working with those clients? Like who is the client first of all? What type of client do you normally work with? And when you sit down to talk about profit strategy, how do you approach that?
Well, one of the first things I want to know, the people that I work with are business owners. They're CEOs. They can have a medium-sized business, but most of them have smaller business that they want to grow. And if you want to grow your business, there are certain elements that have to be in place. And they include a plan for profitability. You have to bring in money and spend less of it in order to have profit.
Right.
And that is what you're going to use to grow your business. So I primarily work with business owners who are already generating revenue.
Hmm.
But what happens is they do not have enough flowing to the bottom. So they're not accumulating cash, they're not accumulating wealth. And every year they find themselves starting over in exactly the same place as last year
Hmm.
with goals to generate a certain amount of revenue. And then they may fall into the same pattern of
Hmm.
spending more than they bring in. And instead of having profit, they end up with a loss.
Right.
And
Right.
that's what I try to, I help them prevent that.
So what types of clients do you typically work with? Who's your sort of ideal client?
My ideal client, usually I have both men and women, but I
Mhm.
tend to work better with women
Mhm.
because they tend to relinquish a little bit quicker.
Yeah, I think that's very true. I think women do business differently than men.
Absolutely.
That doesn't mean that men do business badly. It's
No,
just different.
it's just
Just
different.
completely two different approaches. Yep.
And usually my ideal client is a woman or a man who knows that they've done all they can and they find themselves not getting the results that they want. And now it's time to bring somebody else. It's time to bring in reinforcement. Someone who
Right.
can look at the numbers totally differently from they are and help them make decisions based on numbers, not instincts or emotions. When you work with numbers and you understand how every transaction affects your bottom line, you are mindful all year long. If
Right.
you're selling something and it's $2,000 and somebody wants you to make a deal that is going to cut that down to 15, then you know that 15 is going to reduce your bottom line. And
Mhm.
you're able to make decisions based on that, not emotions.
Right. Right. Well, that's the hard part, right?
Yep, that's the
So
hard part.
so do women reach out to you typically when they're just starting to feel really stuck?
Typically, they do. Oftentimes, when they come to me, it's because they've already hit the wall and they're
Mhm.
not sure what to do next.
Mhm.
Ideally, if someone were to come to me when they're thinking of it, like I got a call yesterday from a young lady who's thinking of expanding. She has rental properties and she just bought a lot. And she said, I'm making a decision on whether to build or to sell it.
Right.
Now we can do an analysis based on what our goals are and see which one would work out better for her. So
Mhm.
she's going to make the decision based on numbers
Right. Right.
before she gets into it.
Right. So the other thing that you when we talked about what you do and the types of the skill sets that you have or your niche specific skill set is you're a profit strategist. You're also a business advisor, which of course is kind of just goes with the whole package. But you
Mhm.
also refer to yourself as a growth CFO. CFO meaning Chief Financial Officer.
Yes.
Talk a little bit about that part of you.
Okay, that is what that comes down to is growing with intention. Is you are planning to grow. It could be another year, two, three. What's working right now? We look at what's working right now that we
Mhm.
can accelerate. What's not working that we can eliminate. Because the one thing you don't want to do is grow a mess. You're going to have a
What?
big mess. Grow something that's not working, that's
Oh,
mess.
gotcha. Okay.
Grow
Yes.
a mess. So you really want to make sure you understand what's aligned right in your business, what's really working well, and also what you really want to continue doing.
Hmm.
Because I don't know about you, but we've all been in situations where we've done work that yes, we do it, but it's not exactly what we want to do. When you're growing, that is the time to really decide what works for you, what works for the business, what works for your bottom line. And I help them see it from all of those angles. Because
Hmm.
remember, I'm outside looking in, I'm not attached to anything. So I can say, it appears that this is working, it appears that that's not working based on your history, based on your numbers. Let's make a decision what we're going to eliminate, what we're going to revise, what we're going to restore, and move forward.
Okay. So this is really interesting to me. Do you have to be someone's accountant in order to do this, or can people hire you to not necessarily be their accountant, but to be those eyes on their goals, similar to what you just did, so that you can be advising them, but you're not necessarily working with them as their accountant? Is that something that you offer, or do you have to be their accountant also?
No. In fact, I prefer not to be their accountant
Okay.
because when I'm the accountant, I prepare the numbers
Right.
and I explain the numbers and then I use the numbers to make decisions to help them make decisions. Any competent accountant can do that. What I do is really based on what the CEO wants to accomplish. What is her dream, her vision? What does all of this mean? Is it for a better and sooner retirement lifestyle? Is
Hmm.
it to put their children through college without what I consider a college mortgage.
Hmm.
Whatever it is you want to accomplish, I focus on the end goal. I think too often people start businesses without an end goal in mind. And
Right.
then you find yourself working and working and working, and you start to get exhausted because you have not defined what it is you want. So you don't know if you're getting there. When you know that you're getting there, you feel better, you feel energized, you can see it, you can
Right.
see the light at the end of the tunnel.
Right.
So I help to create that plan based on your vision. And then we look at what resources you're working with. What are you selling? How do you price it? How do you get it to your customers? What does all of this cost?
Hmm.
And what is left over for you? And oftentimes, if there's not enough left over for the goal, then we have to make some decisions.
Yes. Right.
Yeah.
Of course. So we keep hearing the term virtual CFO a lot, or even fractional CFO. I've heard, which I'm not as familiar with. But so explain what that is, because I think a lot of people, especially people who have probably been in business for a long time, still have a traditional way of working with an accountant or a bookkeeper, and I think they feel that that person literally has to be, in their community. And now, because of technology and the way things are changing, it doesn't have to be that way.
It doesn't. Kate, that's one of the greatest things that could have happened to business owners. Business and finance, that's one of the greatest things. You can have expertise that you need from anywhere around the world. because of the virtual platform, we can we can serve our clients anywhere.
Right.
Imagine someone in Canada
Hmm.
wanting a specific type of expertise.
Right.
They can access it from Brooklyn, New York, or
Yes.
anywhere.
Right.
That's the beauty about the virtual. You don't have to come to the office. You
Right.
don't have to hire based on location. You
Right.
hire based on the expertise that you need.
Right. So, so so as a CPA, can you only work with people in certain places? Like, do you have to be licensed? Is it like being a lawyer or a financial
No,
advisor?
no,
Okay.
no.
Okay.
Not unless I hold myself out to
Right.
perform services as a CPA.
Okay.
A CFO does not have to be a CPA.
Okay.
It helps to have that background, but
Right.
it's not a requirement.
So if you're just joining us, we are talking today with Donna McPherson, who's a CPA. She lives in New Jersey. We're going to talk a little bit about your story. I want to kind of hear a little bit of your background because you don't sound like you're from New Jersey. And
No kidding.
if anybody has any questions, Donna's not only a CPA, but she's also a virtual CFO. She's a profit strategist. She's a business advisor. If any of you have any questions about growing your business or profit or pricing, or even maybe we're going to get some tips from Donna on some year-end tips, which hopefully you've done a lot of your year-end preparation by now, but there's still
Yes.
stuff you need to do in January also. So, so Donna, tell us a little bit about where you came from, because I really love your story and how you came to the US.
Oh, wow. You mean you want me to go
Oh
that
yes.
far back?
Well, not way far back, but where are you from originally?
I'm originally from Guyana.
Right.
That's in South America. The culture is Caribbean, so most people refer to us as Caribbean.
Okay.
Um, but yeah, Guyana
I
is the,
wouldn't mind being in the Caribbean right now, seeing as how
tell
I'm in
me about
Vermont.
it.
It's about 6 degrees and we've got about a foot of
Tell
snow.
me about it. Yes. So I've been here for about 40 years in the
Wow.
US. Yes. And when I came, I first thought I wanted to be a nurse. So go figure.
That's quite different than what you're doing now.
It is. But one of the things that I realized is at some point I would have to do an internship that required that I couldn't work.
Hmm.
And so one of my coworkers, I was a bank teller, I was working at a bank, and she was in school to be an accountant. And she said, "Why don't you try this accounting thing?" I was like, "I don't know that I like it." But I did. And it was quite a journey. But I do recall one thing that someone said to me. I said, "What if I do it? I do want to be a CPA," because I did some research. And someone said, "Donna, if you go part time, it will take you 10 years to become a CPA."
Wow.
And I said, "Yes." 10 years would have come and gone, and I would have regretted if I didn't do it. It did take me 10 years,
It did
though.
take you 10 years,
It
right?
did take me 10 years. Between going to school and then getting the certification, I had to work for a CPA firm for
Right.
a number of years to become certified. So, yeah.
So how did you come to the States again?
Um, what do you mean?
Yeah, well, you came from, so how did you get from Guyana to here again? To
Oh, my dad. My dad was
your
here.
father. Okay.
My dad came on vacation, and my brother was already here going to school. My dad came on vacation. My mom had already passed, and he fell in love, the whole love thing. And then he dragged.
The whole love thing.
You follow your heart. We all follow this heart.
Yes, yes.
So, yeah.
Oh, cool. All right. So let's get into a few things that I think we could help our listeners here today in talking about some things that they may need to be aware of for January. So, I have a bookkeeper. I was working probably November and December on getting all my year-end numbers organized because let's face it, I'll admit it, where I should be looking at some of my numbers during the course of the year, I'm looking at them really quickly because I'm still in the business of trying to bring in new work and serving the
I
clients.
got it. I got it.
And I think we all can probably relate to
Yes.
that. And here I am admitting it in front of everybody. So, but then when I knew I needed to get things in order, once I did it and took the time to do it, it actually didn't take that much time, but it organized things much better.
Yes.
So what are two things that people should be thinking about? It's still, here we are on January 20th.
Mhm.
And but there's a lot of things happening in January that sometimes we forget about or we
Yeah.
overlook.
Well, here's the thing. This is the time to start pulling your information together. By that, I mean, if you have not yet done your numbers for last year, you want to get all your bank statements, go through them for all of your expenses. You don't want to miss those important deductions.
Right.
Um, Also, your credit card statements. If you
Mhm.
purchase things by credit card, even though you have not yet paid that bill, the IRS allows you to write it off because it's an obligation that you've already incurred. So get your credit card statement, your bank statements, go through them and categorize your expenses to make it a little easier for your tax person. Don't give them a shoebox with receipts. We don't like that anymore.
No, no, that nobody wants the shoebox of receipts anymore.
So break them down with what's between your supplies. Don't forget the software, the website fees, all those little things that you may tend to overlook. Pour through those statements.
Right.
Get those, document them. The other thing is a lot of companies are no longer mailing your 1099s and your 1098 forms to you. You
Mhm.
have to go online and download them. For your mortgage statement, you have to sign in, look for those
Sign
statements,
into your bank portal.
sign into your bank portal or
Yep.
your
Your
mortgage
credit union
company
or with a
portal.
mortgage
Yeah,
company, right?
yes. And download that 1098, have it ready. One thing that will help you figure out what you need, look at your last year tax return. If you're a Schedule C filer, look at the category of the expenses. Just go to that form, Schedule C, look at the category of the expenses, and try to come up with all of those expenses categories
Right.
that you did last year.
Mhm.
You do that, you will find yourself in a much better place than waiting until it's time to go to the tax person, your tax professional.
Right. But other things do come in the mail. What kinds of things come in the mail, and do they have to be that they usually come in January? Don't they have to be sent out before the end of the year?
They have to come, they're required to be sent out by January 31st.
Okay.
So some mortgage companies still mail.
Mhm.
So your tax documents, you should receive them by January 31st. If you do not receive them by that date, that is a telltale sign that they're probably wanting you to download them. So
Okay.
just go ahead and reach out and download.
Well, one of the things that I've had to do that I didn't used to remember to do is there were some things with it was one of them was it was stock that I had in my bank, which is a community bank, but I
Yeah,
had to go somewhere to get that because that wasn't mailed by them, and it was a schedule. It was a K
the K,
form.
the
Yep.
Schedule K.
Yeah.
But most investment companies will mail your year-end statement.
Okay.
That much you will get. You will get
Okay.
if you invest in like a Morgan Stanley or any of those, they will mail your year-end statement. If you do not receive it, though, you do want to reach out to your advisor.
Okay, what about W-9s, especially for those of us who are women entrepreneurs? A lot of us have contractors. What is the rule of thumb for W-9s from the standpoint, like, am I supposed to be sending out W-9s to my like virtual assistant, for example?
Well, here's the W-9 is a form to collect their information so you can report it.
Right.
You want to have that W-9 ready as part of your working document. So when you hire a new person and you've agreed that they're going to be paid as an independent contractor, that's where you give them a 1099.
Right.
Have them
I'm
fill
sorry, 1099. I didn't mean a W-9. I apologize. I used the
out. Okay,
wrong term. So
okay.
1099 is what I meant. I apologize.
The 1099, yes. The W-9 does come first, though.
Yeah, okay, there is a
Come
W. So
first. So you
so
make sure
just
you
forget
have
what I said because I'm not the CPA that
okay.
clearly.
So make sure you have that W-9 form because that's where the information is for you to
Right.
mail them the 1099.
Gotcha.
So when the year ends and you accumulated how much you've paid out, you tally that number, you send them their 1099 also by January 31st if you paid them over $600.
Okay. All right.
Yes.
That's really important.
And here's a quick tip for this year.
Okay.
All of those payment platforms, Zelle and PayPal and
Venmo.
Cash App, if you are receiving income from them, if they're paying you now, they're going to be required to report anything they pay you over that amount.
Right.
So if you're having people send you money for non-business reasons, be mindful
Yeah.
that it
Okay.
could push you into a higher tax bracket.
I had something happen a few years ago. It was when I first started taking online payments. So I had Stripe, I had PayPal. I would get a form from them
Yeah.
for all of that. But then I was also recording that in my books as
Ooh.
income. And so then it was basically I was showing it twice.
You weren't, oh my goodness.
Yeah. So my tax preparer caught that because
Got it.
I didn't know the difference. I was wanting to do the right thing
Yeah.
by sending the form that came in with from PayPal and Stripe. But she was like, as long as you've recorded it here, then
Yes.
but don't do it twice because then you're
Right.
gonna,
It is just a backup. If you
yeah,
have it flowing from PayPal into your, if you use QuickBooks, if you
which I
have it
do. Yes,
flowing into your QuickBooks as income, it's already there.
correct.
That 1099 is just telling the IRS that this person received this amount of money.
Right.
You've already documented it. You're good.
Okay. So you don't need to like send that form in then
No,
because it's already in the books.
it's already in the books. If you have it, the IRS knows about it.
Gotcha.
You just want to make sure that whatever that total is that they're reporting to the IRS,
Yes.
your income in your books is at least that amount.
Okay. Great. All right. So to go back to my original question, what are a couple tips people have? So you had started out saying, get your statements together, really understand your expenses. I think sometimes there are a lot of things that people don't realize are expenses. So,
Yes.
and then they miss opportunities.
Well, this one of the things you can do retroactively. If you already spent money, you have those. If you haven't spent it, you don't have the expense. There's nothing you can do about it, except your home office deductions.
Okay.
If you operate a business from home and you're paying expenses for your home like rent or mortgage, utilities and all that, you can still deduct a percentage of that on your taxes based on the square footage that you use for the office space versus
So like the square footage of the spare bedroom, for example. If
yes,
that's your office. Okay.
or your dining room that you no longer use for eating in.
Okay. Right. Okay. Yep.
And your garage.
I can't remember the last time we sat at our dining room table.
Right. The garage you use for storage.
Yeah, right.
Yeah. And your car. If you use your car for a percentage of your business, a percentage of that also goes towards home office. You have a really sharp accountant. They can help you figure out all of this. These
Okay.
are things that you should just know.
What is the rule of thumb in this day and age now with regard to receipts? Like I save all of my receipts and I write notes on them. It's just the way I've been doing it for years. But now my bookkeeper has said, you can take pictures and pull them into QuickBooks and have them live there too. But what if you need to show, I mean, should you still be saving your paper receipts? What's the deal with that?
No.
Okay.
Because a lot of times, especially the credit card receipts, they get erased. You realize sometimes you purchase something and you go a couple of months to look at it. If you have it in your wallet, you open it up and it starts to erase.
Yeah, right.
Yeah, so you're better off scanning it. The
Okay.
rule of the IRS is they just want to know that what you're deducting is reasonable and usual for your type of expense, for your type of business.
Okay.
If you have a copy of a receipt, your business name or your name is on it, that's usually reasonable. And if it's a necessary expense.
Okay. What's
Yeah.
the rule with, it used to be like save all of your receipts and stuff for 7 years?
You still need to keep your documentation for 7 years.
Okay, but we don't necessarily have to keep
You
them
don't have to keep those paper receipts.
as long as we have them
The IRS
scanned or something so that we have
yeah,
proof.
they're up with technology also. They recognize that
Yeah.
no one walks around with all of these boxes anymore.
Okay, except for me. And I keep them in a really pretty box behind me. Well, partly what I do is I do keep the receipts because then when I go through to double check everything, it's still my way of having a tangible, I guess. But once I've gone through it and done that to make sure everything's in, then I've been getting rid of them.
Okay. So
Yeah.
you scan them?
Yes.
Good.
Yep.
Yeah.
Actually, I take photos with my phone.
Oh, that's good.
Yeah.
They have programs for that, Kate.
Well, you know what? There's an app now that my bookkeeper just told me about. So I have my QuickBooks app on my phone and I can take the picture right with my phone and it goes right into QuickBooks and then I don't even need to deal with it.
Exactly.
Yeah. Yeah. And my husband's been doing that for years and he's like, you're the techie and you're still not doing that. I don't know if it's just an old fashioned, like I'm afraid that the IRS is going to need something in paper. I don't know. So, All right. The other tip that we had talked about before we got on the call was um, the various tax documents which you went over that you need to download. So that's a tricky one because I think sometimes just people forget to do that. And what do you
Here's
suggest they do? Like some people may not even realize it.
the best tip I can give you: do it on a monthly basis. You
Oh,
will remember. When you document things, the sooner, it's the better you're able to make sense of it.
okay.
Not only you're looking at your expenses and you realize as if you work with a budget, you'll realize whether you're over or under, but it also lets you explain it.
Okay.
And your bookkeeper will love you more.
So I have another question to talk about. So when we have a lot of us who are in business, as you know, especially who are people like me, like a solo entrepreneur, I set a goal every year for what I'd like to generate for revenue.
Yes.
And of course, what your net income is different because the expenses are still high over time. So when you finally like hit a milestone in your business, let's say you want to make, let's say your goal is to make 100K,
Hmm.
you reach the generated revenue. And
Okay.
then when you look at your expenses and then your net income isn't so hot.
Right.
When you're first starting out in business or maybe 3 or 4 years into business, that's kind of normal, right? And then what do you want to do going forward? Because you want that net income to also go up some, right? And reduce expenses.
You do. But here's something. Here's one way to think about it. You want to know what you can expect in terms of profit from your business based on your industry, what you do. That's just regular operating expenses, aside from the investment that you're going to make to grow your business.
Okay.
So, like I did an exercise with someone yesterday, and her regular operating expenses were about 3,000. But then she's also investing in coaching, in business development, and all that stuff. That's additional. So what you want to do, you want to know what your regular operating expenses are so you know that you're being efficient. And then if you make a decision to invest in, you are taking your profit or what your profit could be to invest in growth.
Okay.
You decide how long you're going to do that for.
Okay.
In the beginning, you're probably going to do more because you
Right.
need more help.
Right.
But then as the years go by and you're better in certain areas, you probably require less of that, but you're going to probably invest in growth strategies versus just understanding how to run a business.
Right.
But if you're getting the return on your investment in growth, if you're investing, let's say 10K in growth, and whoever you're investing with is helping you get 20K,
Mhm.
that's a 50% return on your investment. I say that's worth it.
Yeah, absolutely. But it's
So
also considered an expense.
it's not an expense at that point, it's an
Okay.
investment. And that's why you really have to understand that what you're doing must bring you some kind of ROI.
Right.
You have that conversation. What can I expect? And listen, it may not always be you get money back. It could be you grow your influence. It could be you grow your reach.
So
But
I
it's
love that.
all the words
I love that.
growing.
Growing
It's
your
really worth
influence. That's
growing
really
your, yeah,
key. Yeah.
like investing in with you. You grow your influence, you grow your reach, and at some point that turns into income.
Right.
But it may not be within the first 6 months or a year.
Right.
You just have to plan that out.
Okay.
And usually you can tell someone when they can expect to see this turning into revenue or income.
Okay. That's where you lose me a little bit, and that's why I'm not a CPA or a bookkeeper. But when I give like my numbers to my accountant this year, I have all of my expenses and then I have a line, I think it's professional development, but that is basically it's my coach
Right.
because I have a coach that I'm hire for the year.
But here's the beautiful thing about that. When you invest in professional development, if it's going to give you a loss that year, you may not want to take that loss. You may want to take that. If you invest 30,000 in professional development, you
Yep.
can spread that over 3 years. Do
Oh, really?
10,000 this year, 10,000. Yes,
Hmm.
you can amortize certain expenses that are going to give you benefits over a certain period. So
Oh,
if investing in your coach is going to give you returns over a 3 year period, you can spread that cost over 3 years. You don't have to
Oh,
take
okay.
it all that year if it's not going to give you a benefit.
I see. Okay. Oh, I learned something new today. And I'm going to share that with my accountant.
Yes.
Yeah. So, gosh, you're full of good tidbits today, Donna.
Thank
I
you.
think it's time for a sip.
Yes.
I'm so glad you could do this with me today. So, we're winding down here, and I want to just thank people again for watching on the replay. Most people usually watch the replay, and the cool thing about the replay, though, Donna, is that when I put it out there to people, I can say, "Hey, if you want to learn about this and this, this is what would be good for you." Um, so my friend Lynn is just popping in here from Facebook. She said, "Grow your influence. You should make T-shirts and bumper stickers." So maybe you should make some too, Donna. Um,
Yes.
yeah. Thank you, Lynn. And so let's just talk a little bit. So first of all, if someone would like to set up a call with you or connect with you, what is the best way for them to find you or reach out to you?
The best way, if you type in talkwithdonna.com, you'll get 30 minutes on with me.
Oh, great. But do you also have a website?
I have a website. It's DonnaMcPhersonCPA.com. It's an older site. I'm working on a newer one, but for now, all my information is there and you can reach me.
Okay. And how else might they be able to reach you in case your LinkedIn coach was talking to you?
They can reach me on LinkedIn.
Oh, look at that. It just
Can
happens to
you
be up
imagine? Oh
there.
my goodness, you
Yes.
that fast.
Yeah, we're still finishing some things up there, but your LinkedIn presence is coming right along.
Yes,
And also, you have a book.
I do have a book, and it's called The Price of Fake is Real: How to Stop Pretending and Achieve Real Business Success.
So tell us a little bit about the book. What are some nuggets in there that would be great takeaways for people?
So the whole premise of the book is, if you don't know what to do, don't try to figure it out. Don't fake it, get real and get help. It can cost you so much more, as we know, to
Hmm.
have to redo stuff because you allow pride to stop you from profiting.
Or ego.
Or ego. Yes.
Although both. Yeah. No, I
So if
you
you
know,
don't know, the whole thing is, I've given tips, and I've shared stories of people who knew that they needed help, got help right away, and are still hitting it out the park.
mhm,
And people who refuse to get help and
right,
are still waiting for their money.
right. Danny just popped in.
Hey, Danny.
Hey, Danny. I'm glad to have you listening. Thank you. Um, I also just wanted to put the thing back up about the book. So if you were interested in Donna's book, go to that link on her website, and there's instructions there on how you can get her book.
Yes. And it's also on Amazon.
Oh, it is on Amazon. I didn't see the
Yes.
Amazon link on your website. So, um,
I
we'll
told
put
them
it
about
on Amazon. Well, I
daily.
know that I'll put the title up again just in case. So if you want to find it on Amazon, I didn't know that.
Yes.
Okay, great. Good to know.
If they come to my website, they'd get an autographed copy. But if you go to Amazon, you
And
get the
I
Amazon
always love
book.
getting an autographed copy. In fact, I would like to get an autographed copy of your book.
And you've got it.
Okay, awesome. So, what are some other things based on our conversation? Can you think of any other little nugget or gem that you would like to leave with people today about profit, growing their business? Where do you feel like maybe your sweet spot is where somebody could reach out, to you and have a conversation about something?
Here's the thing. Most people are not, they complain that, or they talk about not making enough money in their business. And usually when I ask, well, how much do you want? What would make it feel like it's worth it to you? They can't put a number out there.
Right.
So if you don't know how much, what is going to make it feel like this business is worth it for you, how are you going to get it? You have to have a number, even if you have to change that number. This is how you get your value. You have to, I call it number your value. Put a
Number
number
your value. I
on
love
your
that.
value. In fact, so happens that I have a training coming up next Wednesday.
Oh, do you? I didn't know that. Oh, so tell us about your training.
So it's called, it's a training to help entrepreneurs put a number to their value and then know how to price their products and services to get it.
Okay.
So I call it, it's called Number Your Value. So if you go to numberyourvalue.com, I have a gift that
Okay.
tells you the three key things that you can do to really identify your value so you can get paid for it. So that's the number one thing. Know the dollar amount of your value. If someone says to you, Kate, I want to work with you, what is your dollar amount per day? That number should just come out your lips, just like that.
Okay.
Because you already know, you calculated it, you know that number will give you your 300 or 400,000 a year, whatever it is you want, know that number.
One of the things I read a book probably 4 or 5 years ago that was talking about not charging hourly fees, like and not
Yeah,
trading time for dollars, so to speak.
I agree.
And to figure out what you have the conversation more about your value than like I charge 250 an hour, you know?
I agree.
Um, and and yet when I still talk to some entrepreneurs, they're still basing everything on hourly. And it's like, I don't even
It
know
drives
what
me nuts.
word to use to say, because like when you work as a coach or like what I do, or what, even what you do with when you're the virtual CFO or whatever, is you're bringing value to something. You're creating usually a package. You're usually
Right.
a long term, 1 month, 3 months, 6 months, a year, whatever. And there's a rate that you're giving them. And these are what you get. Like, if this is your problem, this is how I can help you solve it.
Exactly.
When people ask you that question about coming up with that hourly rate, what do you say?
Here are two things I would say. One is the hourly rate serves a purpose for you internally,
Okay.
not for the public.
Yep.
It is to let you know what the value of your time is. So you should know that. If you know that I'm not going to do anything for less than 2,000 a day, because that's my daily rate if I were to work, just know that. But that doesn't mean that's what you charge.
Okay.
What you charge is based on the value that you're giving that person. And
Correct.
how you know the value is, you got to do some work. You got to know what your competition is charging. You got to know what this person is willing to pay to solve this problem.
Mm-hmm.
And know what your company needs, not just what you need to be paid, what your company would need to be whole, to spend time with that, pay for your VA, pay for all your equipment, your website,
Software.
all the stuff that you use to give them benefit. You want to
Right.
know that number, because when you put that value out there, you can have regrets.
Right.
If the person is taking more time than you thought it would because you based it on an hourly rate and you thought it was going to be 4 hours and now it's like 10.
Right. We have a few more people who've popped in here. And if anybody has any questions, now is your time to ask any kind of a tax or profit question or growth question to Donna. So pop it in the comments and I'll ask her. We were going to sign off, but now that I see all these people are in here,
Well, let's keep going.
we'll keep going. All right. So it's interesting though. But I also think I'm going to get into something a little philosophical here.
Okay.
I also think women are better at talking about their value, whereas I think sometimes the male mindset, and I'm not saying this in a bad way, really seems to still focus on that hourly rate. Would you sort of, do you sort of see that? I think women just know how to have the value conversation a little bit better in some cases.
But you know what, Kate? In some cases, and those are women who have been in the industry or have
Oh,
been building
absolutely.
their
Like they've
business
been
for
in
a while.
corporate or whatever. Yeah.
When they're new, they're still kind of uncertain. They would give a price and they start right away pulling it back. It's like,
Right.
oh, but I can discount it or that, But women who understand, when you truly know and understand your value, you call your number
Right.
because you know that it will not make you feel like you're really doing your best work
Mm-hmm.
if you undercharge.
And would you say I mean, that takes some learning. Like that's not
It
something
does.
like when you hang your shingle out and you say, I'm going to start this new business. That's a challenging thing to do. Everybody wants to just kind of like hang their shingle. They want to make money, but they also know like, okay, I know so-and-so does this and they make, two,
And you go by somebody else's price.
yeah. And you can't go there. So what do you suggest for the person that's starting out so that they're still not undervaluing themselves, but they're also, being realistic?
Well, you know my story. I told you when I first started, I exactly put my shingles out there without figuring out an income strategy.
Right.
And so 6 months later, I had to pull that shingle down because
Right.
the income wasn't flowing.
Right.
So what you need you need a strategy to make money, to sell whatever you're offering. That's the number one thing. You have to know that what you are providing has value for somebody, not what you think you should do, what you feel like doing, or what you see
That's
Mary is doing or John is doing. You have to know that I really want to do this. This is the value of it. People will pay for it because they're already paying for it. Now, how do I get them to pay me?
right.
So, number one thing, know how you're going to make your money.
Well, I also think that if you're going to make an investment, because I think a lot of us, when we start out in business, we don't have a lot of resources yet, or maybe we do, but we're just being really careful on making them last because we're taking a risk
Mhm.
starting a new business. What would you say is one of the most important things a person should do and invest in right when they're ready to hang their shingle?
Invest in someone like me.
Hmm.
You need a plan. I can't say that enough. I've seen people go at it alone and end up spending 3, 4 times as much and end up in the same place.
Well, not to mention the overwhelm and the this
Who's going to guide you?
anxiety.
Right. Who's going to talk? Who are you going to talk with yourself?
Right,
Who's going to guide you? Who's going to let you know that this is the plan and now we're falling short and we need another strategy? You
right,
need someone in your corner that knows and understands business, someone who's done there before. They're 10, 20 steps ahead of you. So they can look at what you're doing and say, if you continue on this road, this is where it's going to take you and it's not where you want to be.
right, right.
So invest in getting the help that you need. The number one thing, it is so worth it. And you may say when you're starting out, you don't have money. True. I've known people start a business on a credit card.
Hmm.
I've known people, I'm not saying, listen, I'm the last person to tell you go put yourself in debt. But if you're not ready, you're not ready. But if you don't invest in what you need, it's going to cost you more. The
Yes.
price of fake is real. It's real expensive and it's real painful.
Right, right. That's my dog. It's okay. He's just having a little moment here. This
He
is
was pretty good the
like
whole
live
time.
TV. Oh, I have a little dog. Little dogs have this thing called a reverse wheeze. And so now in our new world of whatever happens in the background, now you get to hear my dog have his little sneezing issue.
Yeah.
So, well, this has been great, Donna. And one of the things I just got asked, by person who's a fellow sort of influencer in the world of social media or digital marketing, and he's putting together some content. And he asked me if I would answer this question, like, what do you wish you did when you started up that you know now that you wished you'd done then? And I wrote, and I did a little quote for him to use in his content. Is I wished I'd hired a bookkeeper and a business plan person right from the get-go, because even though I knew business and I had worked in companies and my father owned a business, I mean, I'd also, been to college and kind of knew about business and stuff like that. But when you're doing it for yourself, your vision and your
Right.
and your reality can be completely,
Distorted.
yes. And so that was basically my thing. I wished I had done that then. I was able to figure it out and I realized it soon enough, but I probably should have realized it sooner.
Yeah.
So,
It
I
is
mean,
called fill in your gaps. One of
yeah,
the things
yeah,
that I do when I plan for the results that I want, and then I look at what I have in place that will help me get it and what's missing.
right, right,
And that's why I'm working with you, because one of the things that was missing was to have a better reach or more influence with the people that I want
right,
to work with. And I know that I couldn't give that to myself because I didn't know.
right. Well, it's right back to you don't know what you don't
You
know,
don't know what you
right?
know. So you
And
do
so,
your plan, look at where your gaps are.
right.
And if you're really serious about getting those results, figure out how you're going to fill those gaps.
Yes, right, exactly. Well, Donna, I can't thank you enough for having coffee or tea with me today, as the case may be. So
Yes.
thank you so much. We know how people can get in touch with you. Donna McPherson CPA.com is her web. I'll throw that up here real quickly, just so that people can see that. And you can also reach out and connect with Donna on LinkedIn.
Yeah.
Those are the two best places that you can get in touch with her. And please, thank you all for watching the replay on this. And feel free to put questions in the chat and tag Donna or me so that if you watch this in a
Absolutely.
day or two and you have a question, you can put them in the comments. And if we can't, if it's something that's a little more confidential, then maybe Donna would reach out to you through private message.
Absolutely. I'd
Okay.
be happy
All right.
to.
All right. Well, thank you so much for being here today, Donna. Please hang in
Thank
there. I'm
you.
going to end the broadcast, but don't sign out yet. Okay.
Sure
All right.
thing.
Thanks, everybody. We'll see
Thanks,
you
everyone.
Coffee with Kate next month in February, 3rd Thursday. I'm going to be interviewing Andy Foote, fellow LinkedIn expert, and we're going to be doing an Ask Us Anything session on LinkedIn.
Ooh.
And whenever Andy is on my show, there is a ton of people. So we'll see you next month, and I'll be putting out promo for that. All right.
Bye.
Take care.